Hello, ladies and gentlemen. Next week is going to be one of the most fantastic weeks or the worst weeks in our lives. So, first off, we'll provide some actual tangible value onto what we did. We made a video talking about exactly the positions that we were planning on our opening, but now for the most part, my position is fully opened. I'm a little bit on margin, but I do have more capital if I do want to deploy if we see a dip Tuesday. So first off, I'm going to go and explain every single position that I've opened on GME and BBBY. So first, I started with the 950s for January 2023. That was my big leverage play. So from there, my average cost on that is 320 right now. Then I have some GME 200s as August 2022. My average cost there is 850. Then I have GME 150s, which my average cost there is 1940. So that's the main position for my GME. The majority of my position lies in the 950s. If possible, I would exercise the 150s and 200s if we saw an out of control spike. But as of right now, that is the three main positions that I've built. My next position in BBBY, it's almost like a leverage play on GME, because if you look at the option chain, that theoretically there's no delta max, because the way people are positioned right now, it's so far out of the money because the options are so cheap that it's just building up and building up. It looks like it could be poised for an absolute explosion if we see a run, just because the option makers and they've let it gone away from them. So from there, I have my leverage position. I have way too many August $45 calls, August 19th $15, and August 22nd $25 calls, and I have some $40 calls as well. I mean, I have a lot of BBBY just because of the vast leverage that you get from playing that, and it's so ridiculously cheap.
Absolutely, yeah. No, so Josh, kind of I'm in the same boat that you're in. I've got mainly a buildup of $80 calls for Bobby, so that's going to be the January 2023 contract, and maybe like a couple hundred or so. Then I've got a buildup of BBBY 7, BBBY 8 calls, and then a smattering of just various other things, just kind of whatever looked interesting. GME wise, I've got a main buildup of 950s for volatility, because that's one of the things I'm very curious to play, and also that's kind of what I've been using, at least for now. But I'm probably going to change that to hedge my exposure to a potential, violent upside potential or MOAS if it actually gets above that. But one thing at a time. And for Opex, July, a little bit of July, mainly August, some October are the contracts that I'm targeting. And it's just kind of a strike price everywhere from 120 up to 200, again, excluding the 950s that I mentioned before for that. Also, I had noticed, I don't know if this would be applicable to everyone, but I do think it makes sense, to maybe have, one or two brokerages on standby, just in case your primary broker fails, whatnot. Now, don't try to do a stock transfer thing during this, but, just as a matter of good business practice, that's probably a good step in the right direction. So anyways, I guess going forward too, the big news that I saw at the end of Friday, or I guess I caught it yesterday, was that XRT went on a reg show. So curious to see how that plays out. My understanding of market mechanics is just flat out pathetic. I mean, I like to think I'm getting better at understanding. There's so much that I don't know. So I guess that counts for something. It doesn't count for much, but whatever. I'll happily take the little I can get. What I found interesting was right before we started the stream, Dr. Ginger Balls did an excellent DD. It's one of the first or second comments if you go back and
absolutely fantastic. If you want to know the plumbing behind what's actually going on, this was just mind blowing.
Yeah, and it seems to me like, Josh, the more and more I think about this, and this is going to be a thought I'm going to work through and refine a little bit further, but it seems that the market, or at least in the case of where we are right now, in terms of picking winners or price action in terms of the market, isn't necessarily in terms of is a company doing good, or do they have plans, competent leadership, innovative products, whatever. It's more so just who can finagle the plumbing of the market. It's like the financialization of financialization. It's like, oh, well, if you need these many settlement days for this, and you've got a bonus holiday for that, some bullshit thing or whatever.
That's one of my actual issues with crypto, is people are saying this is going to lead to such vast innovation. But how is more financial instruments really going to make us more prosperous? Because we see all the jargon that really just gets brought up. Not to say I don't love crypto long term. That kind of gets us into our first question from Jay that we'll answer in just a second. But everything's just so financialized today, and it is quite literally just pushing production away from the real world, because how many derivative products can be made by Citadel is not going to impact what the average Joe, how much he consumes and produces in society. And we're just going further and further down, just more financialization instead of producing real, actual, tangible stuff.
Yeah, and it just puts meat on that concept. What that's saying, and give Gammon credit for this too, because Gammon's one who's been sounding the horn on this for a long time. It's like, look, at the end of the day, like we have to be like doing shit. You have to be making widgets or doing services or whatever, right? Like you just can't have like meetings about meetings about meetings. Like no, it's just like an economic circle jerk. It's not going to go anywhere. Like if nobody's actually doing anything and they're just being stuck in administrative overhead, that's going to be a disaster. And like to the point is when you look at the market, when people talk about excessive financialization, you have. It's like the reward is now done for people who understand how to maximize or really screw over other players who are actually trying to be productive through bureaucracy or through settlement or whatever, right? The mechanics of the market versus actually going out and doing shit.
Well, no one wants to hear us spew, so let's get into the first question. I'm inclined to believe that we've been seeing is a controlled decline across crypto and the market. Do you agree? Absolutely. This has been incredibly controlled. We have not seen any sort of liquidity event. Bid asks are still completely fine. There's if you want to get filled on an order, you will get filled. So do you think we're in for an uncontrollable, chaotic period in the market / crypto? I think if we are in the midst and the beginning of a bear market, we will see that eventually, because in all bear markets, they usually end with that humongous a liquidity event at the end. Like think back to March of 2020. It looks like we're getting closer to that, but we're not seeing any sort of like actual tangible fragility besides just cracks in the armor. We don't actually see any of the armor falling off in the actual system. None of the credits really freezing yet, but I do think that will happen. And if that happens, it's not going to be just as happy as everyone is buying the dip today.
Yeah, and like the way I would think about that one is that when it comes to crypto, the one thing I always kind of go to, I didn't even look at the price. I mean, I of course consider the price of Bitcoin, and it's what 20,500 or whatever and change after dipping to the 17s this past weekend. But Josh, can you share my screen, or maybe I can do it?
No, I got you.
Okay, thanks. Tether's market cap, and so when you see these lines going down, presumably these are people redeeming tethers for actually dollars, taking collateral out of the system. And so if you have the entire point of crypto. If there's only a limited amount of collateral that supports, the massive crypto valuations, once that collateral is withdrawn from the system or whatever, right, there's not going to be anything there backing it up. Now, whether or not that spells doom, I don't know. History would suggest that for other markets, this is a problem. But, crypto, maybe it'll be different, maybe not, who knows. But again, like if you look at Tether, this is in the past month, this doesn't look healthy to me. But let me just be very clear as far as Tether goes. To the best of my knowledge, Tether Limited, the company behind Tether, has been able to meet all withdrawal redemptions and credit where credit's due. I mean, that does count for something. But when I look at this, sooner or later, if Tether doesn't have the money, or if it's perceived that Tether doesn't have the collateral to honor redemptions, then what's going to happen is that you're going to see the price of crypto spike in terms of Tether. In other words, people are going to be dumping their tethers just to buy something else besides tethers. And so you run into the situation where, let's say, BTC, shoots to like $1 billion a coin of USDT, but at the same time, it will fall, or it could theoretically fall in terms of, let's say, compared to USDC or some other, stable that's going out there. So when it comes to crypto, I keep a really, really, really close eye on Tether. The other thing is when you look at the contagion aspect right now, like just when we started this past, weekend and on Thursday, Friday, you had Celsius running into problems, and I believe, Josh, jump in here and let me know, but didn't
Solano, I think I was just getting messages. I've yet to confirm this. 3 Arrow Capital is having problems. Solano, someone just texted me saying that they were going into some issues. I think it's ADA or I don't know. I don't know all the terminology, but I do know that a lot of these stablecoins are starting to go bust. That's not good. Eventually, we will see an uncontrollable decline, and that is going to hurt a lot of people, especially when people are margined. And I just feel bad for people who are thinking that this is the greatest time ever because and they start leveraging themselves up. It just could end very, very ugly. So Dr. GME, does anyone know how much GameStop pays pays computer shares each month per DRS account?
Well, I think that they do not pay. So I don't know the answer to that, but I know a relative answer, and I suspect I suspect GameStop pays computer shares less than BlackRock pays PiFi to shill covered calls on their behalf. So you can think of it in terms of that. Sorry, PiFi. Just Yeah, who knows? But as PIF has oftentimes remarked, what computer shares is having, earnings are up like 1,000 some odd percent. It's just oh, whatever. It is what it is. So no, I don't know, but probably a lot.
Ooh, my dogs are barking. Just joined the stream. Are you worried about a GME dip Tuesday following this weekend crypto dip? I don't know what's going to happen with the market. We do have forced settlement though. Justin, you want to hop in there?
Yeah. So we say like dip, or so here's the thing, right? Like, if you still have some dry powder to deploy, you'd actually want to see a dip, to pull back, assuming you think it's going to rip by the end of the week. And so I guess, like, look, I'm not a trader. I'm a real estate guy. So I wouldn't necessarily...
In fact, he is the worst trader ever. And
No. Where's the mute button? Where's the mute button? Hold on one second. There we go. Okay. I have a new board that's fun to play with. I'm still working on the sound effects, whatever. But anyways, dumb shit aside. If you believe in your thesis and you're confident in it, like, you would welcome an opportunity in order to...
He's just saying, are you expecting a dip?
I wouldn't say I'm expecting a dip, but I wouldn't be surprised if there's one. I feel like that's such a fucking funny answer, though.
All right. No one really knows. Predicting the future, it is. I do not know. What options do we have other than the Jans? Go to the beginning of the stream. I literally just went through every single position that I had, and then the strikes and dates. So
yeah, and one other thing too, like, if you're playing IV, like, you probably want as far out of the money as you can get. And like right now, if you look at the option chain, let me think about this. The highest strike is the January 2023 option of this where are we? 950 right here, January 2023. And also, just a side note too, when we're talking about this, if you look at the most active call and put, like, people keep buying this stuff up. Almost 2,000 calls were bought up, and I think there's an OI of 21,000 or 19,000. Hold on one second. What's the open interest?
You told me it's 21,000.
It's 23. No, it's 23,000, almost 24,000. So draw your own damn conclusion on that front. But whatever.
Well, you guys still have money. D's perk. I have been taking frequent trips to the Wendy's dumpster to do things for cash that I never thought fathomable.
Them calves, right?
Phil the Shill. I love First Majestic. That is one of my favorite. Me and Justin have been picking up long dated calls on that because you can get some severe leverage. I have not really been buying any calls now because I do think with the extreme rise in interest rates, we could see the metals continue to go down. But I think that there will be a very, very good chance that First Majestic and a lot of these gold and silver miners perform extraordinarily well over the next few years. But I'm not yet picking anything up because I do think there's more downside to go, but I would not be opposed to buying anything right now. In fact, I do have a lot. Way too much First Majestic, and I'm going to continue to buy some as I think it's one of the most solid companies, and I like the CEO as well.
Yeah, Keith Myers, a solid dude. Josh, if you share my screen real quick. So if you look at, this is the 20, so this is as far as 398 business days left. So 1.5 years plus. $25 calls. If you think silver's going to move quickly or whatever, right? Like, what's the price on this? 70 cents if you take the mid. Like, that's almost as good a deal as Bobby if you think Bobby's going to run. So, yeah.
Here, go to the next question. I'm doing something.
Oh, hold 1 second, Josh. Did you? I've got to go away from full screen. So
I'll do it. You answer, and then I need to do something.
Okay.
Hey guys, what's y'all's price target / predictions for next week?
Oh, okay. Price target and predictions for next week. The prediction is that I think whatever prediction we make is going to be wrong. So I'd start with that. For price targets, again, I don't know. Maybe this is the better way to answer the question. When I look at, because the question I really hear is, when are you looking to enter the position? When are you looking to exit the position? Like that. That's kind of what I perceive that the question behind the question to be there. If you follow the PiFi stream daily, you'll note that he will regularly post, Gamma Max. And historically, if my memory serves, I'm assuming I'm saying this correctly, and if not, forgive me. We typically in the past have run up to Gamma Max, and we've gone beyond it by about 30% or so. So I can't tell you what to do, but the way I'm personally playing it myself is once I get to, let's say, 30 or so percent, above, or 30% in terms of profit on my calls. I typically put in a trailing stop. Until we hit gamma max, I'll probably let the trail run pretty wide. So in other words, we'll accept a lot of volatility. But once we do hit whatever gamma max is, we start getting closer to gamma max, I probably will start tightening up the trailing stop, because I'm not a good enough trader. I mean, Josh is, but I'm not a good enough trader to, like snipe the top. And so trailing stops are just kind of the way I do it. I might play around with some conditional orders, but that's I think the answer to the question is that I would keep a focus on whatever gamma max was, and just bear in mind that in the past we've typically run about 30% above gamma max. And so maybe when you start getting up to gamma max, make sure
Gamma max is also going to be changing throughout the entire day. So personally, what I'll be doing all throughout next week is I'll be first off, I'll be watching the option chain through Market Chameleon, just because we are paying for that only for this YouTube. If it is otherwise, we definitely would not have it. But because we do have it right now, I'll be watching. I'll have Market Chameleon open, watching the option chain. I'll be watching GME, and every single breakout after we have exceeded gamma max, I will then start selling off my calls. But if we do see a situation where the call volume is just out of control, then gamma max is going to be increasing wildly with it, and I will probably stick it out. So I'm mainly trading this as an IV play for my 950s, for my 150s and 200s. I'm playing much more conservatively, hopefully going to be exercising them if we do go up enough.
Yeah, and Colin, and for watching the stream, like learn and educate yourself on the various ways to sell, particularly with trailing stops, to make sure you're using.
Trailings. If you don't have enough time, use trailing stops. It is super good technique just to lock in your gains, because so many people, Justin and myself included, you see massive run-ups and then you hold off for way too long because you don't have those stops on.
Twice I was burned, or not. I mean, I still made money, and don't get me wrong, but like I left a lot on the table because of my own ignorance on that front. So
for the September run, I'm not thinking about the September run right now, nor what options I will use for them, because there's so much up in the air. First off, this run has to happen, and then we'll kind of start planning for the next one. Do we think? Oh, wait,
well, just go pick that one. So I would also say too, like as far as the 950 goes, I really like the 950s, but I probably will seek to close out the majority of my 950s this run around, because if we do see a massive spike up, if the OCC will open larger strikes, like I'd much rather buy 950s and pay more for, let's say, a January 2024 than a January 2023. That's just me speaking for me. I have never in my life said, oh, I wish I bought less time on that option. That's just me speaking for me, though. And just a side note, I did 2 years up in Oregon and Willamette Valley before I got bounced out of that school. So Puget Sound's a beautiful part of the country. Anyways,
do we think GameStop would announce something during Opex? I don't know. That would be the ideal time for a split at the biggest like the highest price point to cause some FOMO. But I don't know if Cohen really knows these cycles and that is what he's kind of playing off, then I think there is a situation where they could announce a cycle, and that, I mean, have an announcement maybe of a split or something like that. That would drive more FOMO, and that would be incredible for everyone. But I do not bet money on what these big like CEOs are going to say, and I have no clue what he's going to say. But that would be an opportunistic time when the price is elevated.
Yeah, the other thing too, I would say is, again, like as I'm fond of saying, this isn't happening in a vacuum. And when this happens, this is going to go beyond the world of economics. There are other players I would argue, other players in the shadows that have interest in this. And so if GameStop were to come out, so what I'm trying to say is you've got to manage the optics of this. So if GameStop's squeezing and everything else is crashing, GameStop's going to be under a tremendous amount of pressure. And I think that one of the ways they will navigate this is by doing everything by the book. Listen, we dotted the I's, we crossed the T's, whatever. And more importantly, one of the ways that GameStop can say, like, listen, what we can do to alleviate pressure is we can do, a stock dividend. Now, in reality, that's not going to do anything. But the point is, they've been, well, Josh, when did they first make the announcement? Like someone put in the comments, it was like, I think 2021, they started floating the idea of doing a split, maybe earlier this year in 2022. My point is that like they're already on record saying that this is the case. Shareholders have already approved, the maximum issuance of shares. And so the point is that if people still are pressuring GameStop, because what GameStop's going to say is like, look, this isn't our fault, like, this is the market. We're just trying to sell old stuff or whatever and reinvent the company or whatever, right? But in order to help things along, we can do this. And granted, that's not really going to do much of anything. But the point is that this is the management of the optics of the stuff as the stuff goes on, because I think this is going to go beyond the world of economics. And this, I see that as a card to play, but not quite yet. So,
I'm curious on your thoughts on the entities on the other side of the GMA play. They must recognize the active investor community, right? Or do you think we're perceived as nuanced and relatively banal?
I think back to LTCM when you had John Merriweather, Scholes, and some of the smartest people, in the world when it comes to bonds and ranking these models, and the models that the Black-Scholes model is still used in option pricing today. And I think back to these people. See, here's the problem with experts, and these people are all experts. And just like the people on the other side, these are all experts. They're not stupid, but experts fall in love with themselves. And when they make their complex models, they exclude the complexity of the whole from the complexity of the models they make. Now, as long as that works out, things are great. But the problem is when they get something wrong, or something happens that the models thought wouldn't happen, that's when they become vulnerable and exposed. The biggest example I can point to this is when retail was too stupid to sell. And when I say that, go back to after COVID, summer of 2020, Q3, Q4, retail, armed with stimmy, especially young retail, armed with stimmy checks, FOMO'd into companies they didn't think like a GameStop, whatever, and they just wouldn't sell when the price went down. I suspect the smart guys, this is really more of a psychological battle. They were so used to knowing how to manipulate the psychology to manipulate, retail to sell, but it only worked for, let's say, maybe the Gen Xers and the Boomers, maybe some of the Millennials. But the new guys getting into the market, no, they just didn't care. They were emotional, and so what these guys in the past, that is, were able to do by shake people out, they weren't able to shake people out. And so this is what I mean when I say you get into these models that are very sophisticated, very in depth, and very powerful. But when people start going against the models, or when people start doing stuff that the models say cannot happen, you get serious problems. Again, in LTCM's case, LTCM models had assumed that a sovereign would never default on their own internal bonds. This happened. And ironically, an echo of the past, or echo of the future, I should say, Russia defaulted on their own internal bonds in the summer of 98. This basically blew up bond spreads and eventually blew up LTCM. And I will also note that Wall Street changed, or not that they changed the rules, but Wall Street basically bailed out LTCM, but they were really bailing out themselves in this regard. So long-winded way of saying, what do you think is going to happen on the other side? I suspect that the people, the villains in the story, they view retail as idiots, rubes, or whatever, right? And that might be the case. But what they don't, I think, what I don't think they've correctly accounted for is that retail, is just this new generation of retail, might be from their perspective, too stupid for their models to work. And if that's the case, you suddenly have irrational behavior introduced into a rational model, and that's going to create problems, particularly when it's very, very complex. And you have these complex models interacting with other complex models.
I know you guys have held back for some DGen weeklies. Yes. Tuesday, I do plan on picking up some DGen, probably 2 weeks out, but I do plan on being an absolute DGen. Also, did you guys see PyFi's tweet about BBBY bullish? Yes, I'll actually share my screen because I was freaking out when I saw this. This is basically, this chart was a tweet from PyFi where he's going over like the delta of BBBY. And let's go back to June, and like if you correlate this back to a chart, every single time we see massive delta and the stock runs, it just kind of loses out of control because the market makers aren't positioned for a further run in the stock. So BBBY is looking extraordinarily juicy. And
Josh, let me just ask you a question. That dip in April, back to April 18th, that's when Cohen bought in, right? Did see that dip right there?
I don't know the exact date. I do not know the exact date on when Cohen bought in. Okay. But I do know what is happening right now, and we are seeing massive pressure.
Yep. Oh, let me just touch on one other question. You said there's a good example of like these complex things working around or whatever, right? PyFi speculated, and I haven't seen any better, ideas on this front. But he made the comment that, listen, there's this massive put wall that's been put up to suppress the price of Bobby. It expired, I think, this past Friday, June 17th or whatever, right? And he almost wanted to, or should he did go on to speculate. Of course, this isn't confirmed, that perhaps the people who were trying to suppress the price of Bobby, imagine like a vulture fund wanting to, keep the price down, to pressure the board to sell off assets, buy them on the cheap or whatever. They might not necessarily have been aware of the dynamics of Opex, and so therefore, when you have I don't know how to track this because this is more market mechanics, but if you have a bunch of people buying puts and not people buying calls, the market maker is going to underprice calls to get, it's like a bookie, right? They want to underprice calls to get more people to buy calls and overprice the puts. And so what's been going on is like, Josh, I've been doing this, you've been doing this, and we can't be the only ones that have been doing this. I mean, didn't PyFi say gamma max is technically infinite?
Well, yeah, it's not infinite, but like it has so much room to run just because of the skew in call buying, because people are going so far out of the money because they're like 10 cents. Think back to January 2021 with GME. People were buying so many calls because they were so cheap and there's short interest building. The same things kind of happened with BBBY. So if BBBY's, it has more room to run than GME, but GME has a higher probability of actually running.
Yeah. Actually, it'd be really interesting if Bobby hits, because I think the highest strike in the Bobby chain is 80. and a Bobby hits 80, and suddenly you drag all the calls into money, particularly if it closes on a Friday at 80, that would be interesting. Spicy.
Well, this is a great question. If prices were to shoot up past the highest option strike, is that when things could get out of hand for the short hedge funds and market makers? It would be if people were exercising their calls under those circumstances. The reason, and if every single option was in the money, IV would be through the roof, and these market makers would have to continuously buy. But for that pressure to continue afterwards, they would have to start exercising those calls.
Yeah, and Jay, one other thing too on that front is, like, I think someone asked Pi-Fi this last week or whatever on the stream, and he basically, I'm doing my best to get him right, but again, like, please go back and double check him, because I don't want to spread, wrong information here, but this is what I recall as the answer to the question. When the price, or one of the things that can happen when the price of the stock goes outside the range of the calls, in addition to, the option market makers freaking out and having to manage their delta, is that it becomes hard, if not or it becomes significantly harder in order to manage, volatility positions. Now, as to why that's the case, again, that is far beyond my knowledge of expertise to speak to, but I do recall that it complicates the ability to manage volatility if it goes beyond that. And I think part of the answer is that you have, or the people who are messing around with volatility or whatever, right, they have to start buying the underlying versus options, and somehow that creates more pressure or more upward pressure on the stock, which just compounds the problem. It fosters FOMO and so on and so forth. I think that's close to it, but again, please, double check that.
Justin, what trailing stops do you use?
So the way I approach this is that I've got several different brokers. Fidelity is my main one on that front. Fidelity's
just how far down by the strike? Basically, just going to have a trigger, and when that trigger gets hit on the actual option pricing, then a stop loss is going to be hit. What, like $3 underneath, 2.5?
Okay, so here's a good example, right? I've got a measly buildup of 10 calls for a GME 200. They're up about 30%, give or take, or whatever, right? What I'll do is, when I've got a relatively small position like that, I'll manage each contract individually. So what I'll do is, maybe my highest or my largest stop or whatever, right, will guarantee me ideally will guarantee me a 10% profit, and then I just kind of start shrinking it down, from that as it runs on. If we were suddenly, let's say, on a major run, experiencing VUPs, once we got close to Gamma Max, I'd probably tighten them all up across the board. Ideally, if I was going in blind, I would use conditional things. So I'd say, listen, Fidelity or whoever, right, set up once the price of the contract, let's say 2 or 3 X's, then put in the trailing stop of this amount or whatever. Is maybe how I would do that. But the answer to the question is that I put in my trailing stops from the get-go to guarantee at least 10% when I'm up enough, and then I just kind of start shrinking them back to get more and more and more.
Wow, the chat's blowing up today, guys. I'm trying to stay up top so we can answer everyone's as well as we possibly can. Justin, can you hear my dogs in the background barking?
Oh yeah, they're asking what's
this is actually something that we've been trying to figure out on exactly how you calculate Gamma Max, or to learn about. You can watch YouTube videos which are pretty easy. Just look up like what is Gamma Max, and
and doesn't Market Chameleon calculate it too? What
did you say?
Doesn't Market Chameleon calculate, because we've got this subscription to it?
And so the live feed for Gamma Max, no, I do not think there's a live feed, but you can check it every morning. Pickleman will put it in his DD, or just like the kind of what to expect for the day, so you can look at Gamma Max. It is honestly pretty hard to find just if you're scrolling through the internet. So I'll learn about it, watch a few YouTube videos, and then I would say just look at what Pi-Fi posts in the morning. Yeah, exactly, Colin. Like that's basically what we are not trying to have happen, because if this is not, basically his contracts were up astronomically, up at 18,000, and then he didn't have a trailing stop and he settled for 2,000, which is still great, but you're missing the main chunk of the actual position. So what
this lesson learned.
Yeah. I mean, this has happened to every single person, and the reason why you put the trailing stop is because if this is not MOAS, you still want to have as much upside, and with the trailing stop, you have the upside limit. Like you will still capture the upside if it continues to go up, but you will capture the profit if it comes down. And for me, I get much more upset when I lose humongous amounts of profits than when I miss a little bit at the top. Jay, I'm trying to contain myself with how jacked I am for this upcoming week, and trying not to spread too much FOMO, because if it doesn't happen, it is going to hurt a lot. But I am jacked to the tits, as I say that over here. Who has the control of opening higher strike contracts, the OCC or the?
I think it's the OCC. I think the OCC does, or excuse me, PyFi does. PyFi has to give the OCC the okay, but the OCC is the answer to the question.
How long until can these cycles continue before somebody just goes bust? Until someone loses money. And the thing is, if people are actually well, until someone runs out of money. But
Or until balance sheets can't
well,
be expanded.
that would basically be they're out of money. But these cycles, I think, are going to happen. They're going to get bigger and happen more frequently because everybody's learning about them. And more importantly, institution and hedge funds are going to catch up on this. We may have found an arbitrage where we can kind of figure this out early because there's people like PyFi and the quants that are diligently studying this every single day. But other people are going to figure this out. And the more people who figure it out, it's going to make this bigger and bigger because GME is so unvolatile. Like that is why this is possible, because of the illiquidity on the stock. And along with the illiquidity that's on the stock, people are direct registering their shares, forcing even more illiquidity, making everything just more volatile upswings, even more massive. And that's going to eventually get out of control with one of these cycles, which I think will then carry on to a MOA style event. That's my personal opinion. I don't know how long it goes on before then, but I could be absolutely wrong.
Yeah.
I still believe in MOAS, and I think these cycles are going to exacerbate a MOAS. Because what happens? What is there? 2,000 people in Pickleman's chat every single day. Like let's just say there's 5 to 10,000 people who are playing these cycles actively. What if everyone gets really, really good at it, and then hedge funds and institutions come in, and people actually start to understand pretty much everything that's going on behind the scenes? Everything's just going to get bigger and bigger, and people are going to have a lot more capital, and then that's going to correlate to you buying a lot more shares. And if a MOA style event does happen, leading to exercising of the actual options.
Yeah, and the other thing is it creates this positive feedback loop, because like, look, what the big guys don't want is the big guys don't want arguments amongst the big guys. Josh, actually, probably the most surprising piece of information, and I got this one wrong, by the way. Go back and look at the other videos. I got this flat out wrong. I thought GME was going to go much lower. I had puts, on GME.
I would say that's very, very bullish going into this next cycle because we're starting at a much higher level.
Yeah, but so there's that. But my point though is that, like, how much food they spent, like $100+ million on these things, and they weren't able to drive them into the money. And then you had all those in the money calls being exercised on the Philly exchange. That's probably not retail buying, the puts. That's probably not retail doing call in the money call exercising. So I don't know if the big guys are fighting. Is not the right way to say it, but like, the big guys have, and same thing with retail, but the big guys have the most strength when they are lockstep in unison and fighting and in sync with one another. But the big guys get out of sync with one another. Think like, the option market makers having to FOMO in order to manage their gamma exposure. At the same time, you've got a failure to deliver, or you've got FTDs mounting. So, you have forced, what is it, buy to close, I guess, in that situation going on. That's when the stuff, comes together. It's when you have, when you have one big guy fighting another big guy, or two or three or whatever, right? And even if retail gets into the fray too, that'll be a huge plus. But.
All right, Justin, there's so many questions. We got to rapid fire them. Do you think there's going to be a black swan event coming soon? Yes, because there's so many things happening in the actual financial system. The dollar keeps rising, interest rates are rising across the world.
Yeah, and don't forget, Klaus Schwab, the World Economic Forum, they keep talking about there will be a new global pandemic cyber attack. The code word. The elites are planning on crashing the fund. just between us girls, that's what they're really trying to communicate. So don't be surprised when it happens.
Thoughts on Reg Show XRT going back to on Reg Show? Bullish.
I wish I had the GIF of Ron Paul, doing the like that. That would be my response.
When do you guys think in the cycle will kick off? Does borrow rates matter much for the cycle? Yes, because they actually have to go into the market and actually borrow these shares. And borrow rates are a good psychological, and it's good to track what is going on behind the scenes, and everyone can kind of see that. So I do think borrow rates are important, especially seeing them so much higher than we've seen in many, many months.
Yeah, and Ginger Balls called that in his DD. And last-wise, when it will happen? Sometime between now and the eventual heat death of the universe. Next question. Sorry.
There is no market maker for BBBY. It's a NASDAQ stock. LOL. That is very, very interesting, Stefan. I think that would be how you say your name. Please tell us how to actually say it. Do you think that's Stefan?
Yeah, probably Stefan. But I would say, so the question I have for that is, there might not be a market maker for the stock, but is there a market maker for the options? Because I think there would be a market. Oh, that's a good question for BuyFi. But you might have an option market maker, even if there's no market maker for the stock. Just a heads up.
What happens to GME if it goes under Reg Show? extreme amounts of FOMO, I would say.
Like when you see the warnings, like if you have an erection lasting for more than 4 hours, contact a doctor. I would be contacting multiple doctors.
Dio, does anyone know if there's like it's actually live, Lewis? It is actually live. Wow. Wall Street FOMO happens, chaotic neutral, chaotic good.
Yeah. I'm a fan of Pillars of Eternity, so yeah, and Baldur's Gate from back in the day.
I'm relatively new to all this, but really believable that an entity throwing down dollars on BBY does not recognize the situation / cycle, or do you think they know something that we don't?
No, but here's a good example of big guys fighting big guys, because if you have some guy that's trying to suppress, Bobby, in order to make a vulture offer to compel the board, to make a fire sale of like Bye Bye Baby or whatever, right? And they don't realize that Opex is going on. You have the big guys. You have one guy with institutional firepower doing one thing, but as soon as that put is taken off, assuming it's not bought back, and I guess we won't know if it's being bought back until Tuesday opens up or whatever, right? But you're going to see the price of stock rocket up. You see the price of stock rocket up. What did PiFi say? Like $10? It's a spicy number. Josh, help me. It was 10, right? 10 the number I put in my mind, or whatever, right? But the point is that then
it was 8 to 10. After that, it's just the calls have complete control of the option chain, and we can see a real spiral of gamma building.
And not to harp too long on this question, but when you think about what built this shit up was the fact that you had this guy buying puts, which forced the option market maker, to not necessarily misprice, but like the price calls really cheap. Cheap calls are attractive to retail, and so I mean, like, this is an example of like the big guys being not manipulated, but being rammed against each other.
Shout out to everyone in the chat trying to gain wrinkles on these guys. I am too young to get wrinkles, and Justin is far too old. He should have already had them.
Here.
What happens if they turn the buy button off? Yeah, I mean, this is something that we have to be actually concerned about, and why you don't get at the money, weekly calls, or if you do, you're playing them very diligently, because if they turn the buy button off, that is going to screw off these weekly holders.
Yeah, so they did it once before, and if they do it again, like there's going to be there will be more of a political cost to pay it. Unless they won't do it again.
What will be even better is if they turn the buy button off just during one of the cycles. If it's not even like a MOAS style event and they have to turn the buy button off, it would be very difficult to do it a third time. I mean, fool me once, shame on two. Fool me twice. I don't know the saying, but you guys.
Fool me once, shame on me. Fool me twice. Or fool me once, shame on you.
Whatever. You guys know it. Hello, James Park. Thanks for coming. Justin, what are you sipping? If it's not $3 bottles of wine in that cup, you are doing it wrong.
No, I'm a fan of Comte's. There's a champagne that I first found on Cathay Pacific First, which is pretty tasty. Although Josh is more of a Billicart man, but nothing wrong with Billicart. But I definitely like Comte's. That's my go-to.
But what are you sipping in that cup? I'm sure it is iced tea, as my mantra than any human on Earth.
Yeah.
I find it funny that right before the major cycle, we see mainstream media pushing a short squeeze narrative. It is very, very funny.
One of the things that might be, so like one of the ways you might be able to manage a short squeeze, if you can do like a fake psych and get retail to sell out, like, oh, we'll let it squeeze up to 500 or whatever, right? So like, look, it's the same thing that the market makers are doing. Like, this is all a psychological game. In fact, you could even argue World War III, if you want to go down that rabbit hole, it's nothing been a giant psyop on the species, but whatever. Yeah.
Stefan, he disagrees that hedge funds will get in on the cycles. Doesn't fit their risk models. I think the best some hedge funds will control. The reason why I think hedge funds will get in, if there is a way to make money, they will. If there is an arbitrage play where a stock runs $100 every single quarter, it's going to pick up on their models. And if it picks up on their models, they're going to watch it. If they keep on watching it, it keeps on happening, they are going to try it. And if it works, and they're going to keep on doing it until it doesn't work. There was a great story that that George Gammon told me when he was in hanging out in St. Bart's with a bunch of the extraordinarily rich hedge fund guys, like oh shit, who's this buddy down there? That long hair, he's whatever. But basically, the only thing this guy would do is he would find arbitrage plays and he would exploit them until they were no longer possible, and then he would find the next one. He specifically said that there was no edge in the market. Well, at least he didn't care. He would only try and find stock where he could squeeze an arbitrage and juice it until it was no longer a thing. And I can assure you, there will be people, if there is a way to make money, someone will find a way to make it. So if you think that hedge funds are not greedy enough to profit off something like this, then I don't know. Maybe I'm wrong, but that is just the way that I see it.
Yeah, no.
James, I saw that Every 3 months since February 21, we saw that SLD cycle run around Opex. Last was November 21. It should have been February 22. We've skipped February and we saw it in May 2022. This run in May 2022, I suspect it from insider buying. Do you think this cycle will reset from March? So next cycle is this month, June 2022.
Market mechanics, like that. That's a Pi-Fi question.
Atlas shrugged. Yes, that was my quote on my high school quote, whatever you put for your yearbook. We're starting at a much higher level. I hope this is good because it is unexpected. My thought process is things we aren't experiencing means there is something new we don't understand. It absolutely could be.
Yeah.
That's a great point. As of right now, it just seems like we're getting more and more data to support all of this, especially, I mean, people are getting really, really good at what's going on. I have no clue what's going to happen, but that's a really great point that something new that we have not yet seen could happen. And that's why I'm going to be closing out my calls by next Friday if nothing happens. If there's a way that they're rolling their obligations, that means this cycle, I was wrong about it, so I will be closing my entire position if we see no price movement. I have concern about timing. I'm excited about the possible June's run-up since quad witching, expiring bear market, low liquidity, split dividend, et cetera, et cetera. But we have
there's also next
from every 3 months of 2021 into 2022.
Yeah,
sorry, correction. I say April 2022. I suspect it from an insider buying.
Yeah, so I don't know who's buying on that front, but I definitely think it is, it's prudent to, be very suspicious. I have got a come Monday, not this Monday, but a week from this Monday, I've got a pretty hefty 6-figure bill that's coming due that I will have to pay. So I certainly hope that we have some positive price action. I don't have to pay it, but I probably should pay it. So.
The only way that we are different when we're not making videos is we are a lot more profane and make jokes that probably would not be too YouTube friendly. If you guys are going to be at Rebel Capitalist Live, ask Justin about the Flintstones.
Jesus Christ, Josh.
I know you guys said you're still buying. Monday, the market is closed. So Tuesday, what will you guys be waiting to buy? Market open, afternoon, etc. It all depends on markets, on what's actually going on inside the market. If we see a big dip and there's a nice IV crush, I'm gonna probably pick up some DJ and YOLO like 2 weeks out calls just to try and maximize the cycle. But it all depends on what actually happens Tuesday. If we start ripping, I'm not going to buy anything because I've already positioned myself. Anything else, Justin? No, what's going on?
Yes, this one right here. Like exactly, the point is like turning off.
You got to read it.
Oh yeah, they'll turn off the buy button, which would be a reverse Uno card to retail. Both would be running to the exit door once the price starts getting to crazy all-time highs. Yeah, so this is one of those things where like you've got like retail has been like retail's primed. And it's very much on people's radars. So they've got to figure a way to manage it without calling attention to it. But like the more and more they the more and more they manipulate it, the more and more ripples that people see, and when the more ripples people see, the more interest that it brings to bear, which is what they don't want, which just causes more people to jump in, which means it has to be managed more, which causes more ripples, which causes more people to jump in. You've heard that all before.
Any thought on what parameters? Oh, sorry, I can't read.
Yeah, any thoughts on what parameters GME leadership is waiting for before executing the stock dividend? Yeah, Jay, my take on this front is that this is not happening in a vacuum, and the implications of this go far beyond the world of the markets. And so the GME leadership has got to play this by the fucking book. Pardon my French. And so my suspicion is that I'm sure they have a top-notch legal team, compliance, and all the other stuff, but like and it has to be managed optically, because GME blowback will come back against GME saying, oh, that company's crashing the market, and GME has to be able to say like, look, we've issued more shares, we've put out warning. I mean, like we've done everything. Like, so GME has to basically be just as frustrating it is for GME to like say like, oh, a squeeze, oh goodness, oh heavens to Betsy, what's that? As annoying for it is right now, when the squeeze is actually happening, you want the same thing to go through, because you was like, oh, hey, it's not our fault, market mechanics, or whatever. So I think there's a political dimension that has to be managed and all of that.
For your trailing stops on options, opinions to use a percentage or dollar for nominal value for trailing stops. Justin, are you doing dollars or percentage?
I have been doing dollars.
I'd probably do percent just because I'm I'm a loser. But I'm not putting any trailing stops because I'm going to be sitting at my computer actively doing this. Justin, on the other hand, and if you do not have the time to sit and watch, I would absolutely have trailing stops. I'd probably put 1%. Justin's put in $1.
Yeah, so here's something. So as Josh mentioned, Josh and I and a few others are going to be at are planning on being at RCL in Miami next weekend, and so I'll be driving over from Houston. And so the thing is, when you have a dollar amount on a trailing stop, the higher the amount of the contract. So if the dollar amount remains the same, okay, the percentage decreases in real terms as the value of the contract goes up and up and up. And so you kind of actually have like a self-correcting mechanism or whatever, right?
And with that percentage, if with these massive IV bumps, if the percentage is say 20%, like let's say we see a humongous run in IV, just a quick humongous jump, the dollar terms, you're going to capture way more gains than if you had the percentage terms.
Yeah, so that's one thing. Because the one thing about $1 is that you can start off $1 like a $5 trailing stop on 20 is 25%. Okay, $5 that thing goes up to 100. It's now 5%, and so you have this compression as when the dollar amount remains the same, but the value goes up. It compresses down, and then when it gets stopped out, you capture it.
Oh, great one. It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. Just in June 2022.
Yeah, that is actually not me. That is that's a Reagan quote.
I think no, that's a Mark Twain quote, I think. Or like
Reagan had sorry, you're right. Reagan had a quote where it's like he was basically trashing the Dems. It's like, it's not that our Democrat friends are ignorant. There's just so much they know that, well, just ain't so. Reagan had a bunch of quips, but that's a side political.
What is the chain of liquidation after hedges? It depends on how big it runs, but I mean, it could go to banks.
I don't know how it's going to go through, but I can tell you the end boss of this is going to be the Fed. And the reason it's going to be the Fed is because if this thing blows up and it blows up big enough, it's going to eventually hit the DFMUs, the designated financial market utilities, the DTCC, the OCC, COMEX, if you follow silver and precious metals and all that stuff. And ultimately, what's going to happen is that the Fed will channel or the Fed will bail them out. And that's ultimately, I think, how this is going to end. Now, how we get to that I don't know, but I'm pretty confident that's the end. That's the final boss. That's the final boss.
Is there a website to calculate theta decay on options or see what calls ever? You can just see what the actual theta is when you're looking at the Greeks on a stock, and you can see what calls everyone's buying on Market Chameleon. That's what we use, but it's $100. I'm sure you can find it for free if you scalp the internet enough.
Yeah, Lewis, what you might do is open up a Webull account if you don't trade on it. But like Webull will do a pretty good job of visualizing. If you just were looking at where OI is being built up, Fidelity has some. It's kind of boomerish, but Fidelity, you have to have an account with Fidelity, and it's free. They've got some pretty good tools too, for that. And if you want more in depth thing, again, Market Chameleon, it's $100 a month, but whatever,
Skip my comment. Well, you just said I looked tired, which I am, and there was not a question there. Do you think
probably.
Do you think they can cap the share price? Josh? Shit, I'm frozen. I'll be right back.
So here's the answer to that one. I suspect that they have tricks up their sleeve they have not used. The question then becomes, if they can cap the share price, at what level can they cap the share price, and for how long can they maintain the cap? Because again, if they start doing shenanigans in order to do this, what's going to happen is that it's going to attract more attention. It's going to create this positive feedback loop, which might just exacerbate the problem and make it worse. So at the end of the day, the answer to the question I would say is yes, there's probably shenanigans they can use to manage the price for your protection. But in the process of doing so, it's going to be incredibly expensive. It's going to attract more attention to what's going on. And I don't know how long it's going to be sustainable for that. So yes, but it's not necessarily as bad as you otherwise might think it would be, particularly if it gets people to FOMO in.
All right. Shit, I hear massive echo, Justin. Oh, not anymore. Something was tripping. Thank you, Lewis. If you do find something, please let us know, and we will share it with everyone. So that seems like that's pretty much it for the question. What are you guys' thoughts on what's going to happen next week? It seems me and Justin are way too bullish, and there's been a 100% guarantee on fading us, which is a very bad sign. As we're hoping to break the buck this one.
Yeah. So let me just answer this one. Even if they're capping it during the squeeze, my suspicion is like, here's an example of how they might cap the price during the squeeze, whatever, right? Things start shooting up. Let's say GME goes beyond, any option strike, whatever, right? $1,000 or whatever, right? At which point things start freaking out, markets start selling off. The SEC might step in and freeze GameStop for, let's say, 2 weeks or whatever, right? Let things calm down. So congratulations, you now have capped, or the SEC, our regulator, stepped in and capped the price. Again, my example of $1,000 or whatever, right? But when this finishes up, there is going to be so much attention focused on this. And like the SEC is gambling, I would assume is gambling in this case, that retail will basically, they'll be so worried, like, oh my God, I hope we can sell, I hope we sell, that when it does open it back up, they sell and the price goes back down. But at the same time, if retail just gets more and more pissed off, like, wait a minute, the very regulators that are supposed to protect us are basically just fucking us over, how dare they? Not only am I not going to sell, I'm going to take this 2 weeks, in my example, and save up money so I can buy even more. That's what I mean when I say, yes, they might be able to do shenanigans, but if shenanigans just enrages retail and causes retail to start hate buying more and more and more, it becomes self-defeating. So even if it's going on during the squeeze.
All right, everyone, go follow our Twitter, as I'm trying to get more active. But everyone has to comment on the daily that Justin needs to tweet more. It is right now. I'm trying to.
I will tweet more when you shave your head, Josh. We've discussed this prior.
Every single day I try and convince him, and every single day it is without fail unsuccessful. So Macro After Dark, check us out, and we will see you guys on the next one. And next week, what are you guys got to let us know what you actually think is going to happen, and if you're going to plan on fading us and going short, as you will probably be successful. Please do not take anything that we say as financial advice. It is wrong 100% of the time. Thank you, and we will see you on the next one.
Oh, one last thing too. Next week we might be a little early. I might have to be on a plane, so we'll see how that takes us.
When? We'll talk about the software.
Yep.
Well, and then the